Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So traders, what I've learned from Ray Dalio is looking at what we call the short-term debt cycle. So the SB, short-term, or SD, short-term debt, and long-term debt. What the short-term debt, right, is like we go through these booms and busts every, say, 5 to 10 years, right? We go through a boom, right? This is the debt, right? We have it there, and then we start to accumulate off, and then this is basically the debt, right? We go through all this sort of what we call this is these points here are every 5 to 7 years, okay? Every 5 to 7 years, or every 5 to 10 years, or every 5 to 7 years on average, that we actually have, we have something in the market, we have something in the economy where it needs stimulation and needs more debt from the government, and we grow and grow and grow and grow and grow from there, okay? So this is what we call the short-term debt cycle. But there's also a long-term debt cycle where every, say, 50 to 70 years, there's what we call the jubilee, right, of washing away. And if I look at that, the long-term debt cycle looks something like this, right? It just goes up like that, and then gets to a tipping point where this tipping point right here, in the debt, after say 50 to 70 years, when we get to that junction, that's when other things that are associated with the government are going to start to be affected, right? Because we've gone to a point now to a point where it's going to be affected. Now we are at that point right now, and the reason why is every time we go through a debt, an expansion of debt, right? So expansion of debt. And it just continues to get higher and higher. What happens is through these times, if you look at that, and if I just draw, say, a red line, think about these points through here as in the interest rates, right? So the interest rates are up here, and then the interest rates are down here, right? And then they drop up, and then they come back down, and then they drop up, and then they come back down, and they drop up, they come back down. Notice how the interest rates here can only get to a certain point before it picks the next bubble. Then the next bubble here is actually, the interest rates can't get as high as the previous bubble, and then picks that bubble. And then this one here. And what's happened just recently, right? Recently, just like this point here, right? We've hardly moved with the interest rates really, and it's already starting to pick the bubble. So that's how you know you're getting very, very, very close to that what we call debt jubilee of washing away. So the debt, global, or the debt is going to explode, and people that are people with healthcare, people with pensions, all that sort of stuff are really, really, really going to be affected over the next decade as this thing starts to unravel, and we have this debt jubilee washing away. And because a lot of this is in US dollars, what's likely to happen with the US dollar? It's going to get devalued, which is probably going to put pressure on the US dollar, which is probably likely to indirectly put a lot of pressure on on silver and gold and metals like that over that time as well too. So this here is when you think about the debt, just think about that, right? Short-term debt cycle, every 5 to 7 years we have a boom in the debt. But what happens is, because there's too much debt, when we do raise interest rates, it's always a lower of interest rates. So we have this lower here, and this one here is much lower than this one here. It can never get to the previous boom or previous boom time, because because of accumulating too much debt, and the more debt we accumulate, as we're doing right now, right, the interest rates can't go as high. So looking at this from a macro scale, looking at this from a big scale right now, that's where we are headed right now as we speak. And over the next 1 to 2 years, this whole thing I'm talking about here right now is going to unravel. In fact, no, it's happening right now. We've already started to decrease interest rates. We can no longer increase interest rates. We can decrease interest rates. Where did I learn this from? I learned it from Ray Dalio. He's the best out there. Go get his debt, understanding big debt crises, because you'll understand where we are right now and what's likely to come. Please, please, please go get that, go read it, and you're going to absolutely love this. And this is giving you a bit of a macro scale of where we are at and what's coming over the next couple of years. No, over the next 5 years, what we're pretty much almost definitely going to experience, which is a recession, which is probably a starting of the debt jubilee, which is pensions, healthcare, things associated with the government are going to be affected big time. And if you are reliant on the pension, or you are reliant on healthcare, then you really need to get your act together and start building something behind you, because it's going to be very, very big. Now, this is probably going to last about for a decade. This would actually happen in the 1940s, 1937, 1940s. It's probably going to last about a decade. And then after that decade, then we're likely to start to go through another expansion for the next 50 to 70 years, which is boom, bust, boom, bust, boom, bust, boom, bust. After they start to devalue the currency, after they start to devalue, downgrade the debt, all that sort of stuff, so they can get rid of the debt, then it's going to go flat for about 10 years, and then we're going to start the cycle all over again. So yeah, that's what I'm seeing there, guys. That's what I'm learning from Ray Dalio. That's my understandings of that. I hope this helps you out. Hey traders, before you go, make sure you head on down to johnsfreegift.com because I'm giving away a brand new trading course. It's 10 videos long, over 12 hours long. We've got the foundations, we've got chart reading strategies, we've got a couple of different trading systems there, the mindset, the differences between people who do really well and people who don't do well, and so much more. If you're struggling with your trading right now, then you need to get access to this trading course. So go to johnsfreegift.com right now to get free access to this complete trading course right now.